Is silver actually a smart investment heading into 2026? Or is it just a shiny asset that never lives up to the hype? Today, we're breaking down silver, the facts, the risks, and my personal opinion. Quick disclaimer before we start. This video is for educational purposes only. This is not financial advice. What is silver and why does it matter? Silver is both a precious metal and an industrial metal, and that's what makes it unique. On one hand, silver has been used as money and a store of value for thousands of years. On the other hand, it's a critical industrial input used in solar panels, electronics, electric vehicles, medical equipment. This dual role means silver is influenced by economic fear and economic growth, something very few assets can claim. Financial/fundamental strength? Unlike stocks, silver doesn't produce cash flow, so we analyze it differently. Instead, silver's strength comes from supply, demand, and scarcity. Strengths: limited global supply, rising industrial demand, especially green energy. Acts as a hedge against inflation and currency debasement. Concerns: silver is volatile. It can underperform for long periods and then spike aggressively in short bursts. There's also no yield. You're relying purely on price appreciation. Fundamental strength, 7 out of 10. Valuation versus historical context. This is where silver gets interesting. Historically, silver has traded at a much lower price relative to gold, measured by the gold-to-silver ratio. Even after recent moves, silver remains cheap relative to gold and inflation-adjusted highs. The big question becomes, are you buying silver early, or are you buying an asset that stays undervalued longer than you expect? Reality check. Silver is still below its all-time highs. Inflation has permanently raised cost structures. Industrial demand is structurally rising. Valuation, 8 out of 10. Competitive advantage? Silver doesn't compete like a company. It competes as a portfolio asset. Its advantage is diversification. Why silver stands out? Physical asset, no counterparty risk, performs differently than stocks and bonds, benefits from both inflation and industrial growth. Silver isn't meant to replace stocks. It's meant to protect purchasing power when confidence breaks. Competitive advantage, 8 out of 10. Future growth potential. Silver's future depends on a few powerful long-term trends. Key drivers: global push for renewable energy, electrification of vehicles and infrastructure, continued government debt and money printing, potential monetary re-rating of precious metals. If green energy continues scaling, silver demand doesn't just grow, it compounds. Risk: if economic growth collapses, industrial demand could temporarily fall. Growth potential: 8 out of 10 risk factors. Silver is not a safe investment in the short term. Main risks: high volatility, long periods of underperformance, sensitive to interest rates and dollar strength, emotional trading cycles driven by hype. Silver can frustrate investors who expect quick returns. Timing matters more than people admit. Score: risk level, 5 out of 10. Final score for silver: fundamental strength, 7. Valuation, 8. Portfolio advantage, 8. Growth potential, 8. Risk level, 5. Total score, 36 out of 50. This is not a buy or sell signal. It's a framework for thinking. In my personal opinion, silver is not a short-term trade. It's a strategic hedge, something you hold when you don't fully trust the financial system. If you're looking for fast growth, silver may test your patience. But if you want protection against inflation, debt, and uncertainty, silver deserves serious consideration. Whether silver is a good investment depends on why you own it, not the headlines. If this breakdown helped you think more clearly about silver, hit like and subscribe to Is It a Good Investment? We break down stocks, crypto, and hard assets, facts, risks, and opinion only.